Well, and what's emblematic about that story is sometimes you find the greatest capitalists, in communist or socialist societies, because they know really, where the end game is on those regimes, and they become hardy embracers of capitalism. Again, you go to our higher education, institutions of higher learning here, Robert, they don't even teach you about money. I mean, all this stuff about how money is created, what you sussed out, haggling with that Vietnamese woman behind enemy lines in Vietnam, you learn more about money than what a Harvard graduate gets taught.
Yeah.
Except they get the rationale for why printing is always a good thing.
Yeah. Yeah. And that's why Jim Records always says, you don't need to be an economist to know inflation's here.
You don't. Now, one of the nefarious things about inflation is that when it's moderate, it is hard for the average person to suss out. They can kind of feel the accumulation of it over time, but it's sort of like that frog in the pot, right? One of maybe the silver linings of the injury that we took from COVID in terms of the spike in cost of living is it sort of pulled back the curtain, and the average person now got to see, wait a minute, something's going on here. Like, our money is losing purchasing power at a rate that just doesn't feel like it really should. And we have a moment in time here, I think, where we can try to bring more people into the tent of education to explain what's going on here, because they've been able to see it now. And I think one of the things that I hope doesn't happen here is if the Fed is successful in getting at least the official inflation rate down to 2% or whatnot, and we go back to kind of the slow burn. I really don't want the populace to go back to sleep on this. I want them to remember this and then demand of their future elected officials, hey, we want you to embrace policies that are going to prevent that from happening to us again.
Right. So let's speak to the average person. And the thing that's on my mind, I think 71, when Nixon took the dollar off the gold standard, then the U.S. Treasuries and U.S. bonds became gold, basically.
Mm-hmm.
And then today I'm watching the bond market. People are dumping bonds to buy gold now. And so I look at that and I go, my God, what's the end result of all this? So from your position as a classically trained finance guy, what's going to happen with this bond market if they keep dumping it?
Well, so eventually with the bond market, rates will go higher, right? So for two reasons. One, if people start buying other assets like gold instead of treasuries, there's less demand for treasuries. So bond prices will go down, bond yields will go up. That's just simple math. But if and as the world starts saying, I think dollars are going to continue to lose their purchasing power now at a faster rate going forward, you got to compensate me for that. And you're just going to see the treasury yield just start shooting the moon, right? Now, a lot of people, I just want to correct one narrative here. A lot of people are saying, nobody wants to buy the U.S. treasuries anymore. And, the U.S. dollar is going to lose its world reserve currency status and whatnot. It could, and history shows it probably will at some point in time. But that's going to be a slow process, a lot slower than a lot of people who are really ginned up about this, I think, are taking into account. And a big question you have to ask yourself is, okay, well, if you don't want to hold U.S. treasuries, whose debt do you want to hold? And the honest answer is nobody else's is any better. And for a lot of reasons, very few other countries' debts could replace the treasury just from a scale standpoint. So it is highly unlikely that the world is just going to abandon the U.S. Treasury system tomorrow or abandon the dollar tomorrow. Now, that being said, this slow burn, maybe even over time, accelerating burn of purchasing power in the U.S. dollar, I believe is one of the things I've got the highest confidence is going to happen here. It's just going to happen with all fiat currencies. And so you want to ask yourself, how do I protect my wealth against that? And obviously, Robert, that brings us to things like gold.
Right. Thank you. So what advice would you have for, I asked Trump this question one time, what advice would you say to the average investor? And Trump says, don't be average.
Yeah, I think that's great advice. All right. Well, it's going to be hard for me to top that one. But I do have several bits of advice on that. Well, okay. So first off, kind of to my point there, like don't uh, don't just trade by the headlines. Oh, world's dumping the dollar. I got to get out of it tomorrow, right? Type of deal. A lot of regular investors do that, and you gotta understand that the headlines are partial at best in terms of what reality is, and oftentimes they're wrong, and sometimes they're the opposite of what's really going on. And a lot of times those headlines are written to kind of trigger you emotionally.
Right.
And so, an emotional decision around money is very often forcing you to make the wrong decision at the wrong time. So I would definitely not, just see what's on CNBC or look at what's in the headline of the journal or whatever, and then rush to trade based on that. I would get smart. Another thing that investors tend to do too is they tend to take on a lot more risk than they need to. Either swinging for the home runs, or Robert, they just haven't done the work to really identify what are my goals? What are my financial goals? What am I shooting for in life? Why am I doing all this, right? And if you're specific about that, if you can really craft and say, look, I want to hit this goal by this time, and you sit down, you actually create a plan on how to get there, you will oftentimes find that you can hit your goal on time by taking less risk than you think. So why try to swing for the home run where you're going to strike out a lot more? And why not focus on hitting doubles and singles that'll safely get to your goal in time with a lot less risk? And so, yeah, I find I've had a lot of people just are too reckless.
Yeah, let's call it in my world KISS. Keep it super simple.
Keep it super simple. Exactly.
Yeah.
Exactly. I mean, I could tell you how to be a millionaire if you're graduating high school, which I just did this with my niece. I was like, look, I can tell you how to become a millionaire with a high degree of probability by the time you're my age. And it's pretty easy. It actually doesn't. It's not that heavy of a lift.
No.
You just have to be really committed and really disciplined. But it's a keep it simple strategy.
That's the problem. Discipline.
Yeah. And oftentimes we're our own worst enemies.
We need to go to break, but I want you to think about this, okay? Because you and I are technically teachers. And if you listen to a crackpot that's on YouTube, a lot of whack jobs out there. You know what I mean?
Absolutely.
So I'm going to ask you, who do you respect and listen to? In other words, I look to you as one of my teachers.